Stocks recover after a weak open, suggesting some buying on dips. Oil and gas and metals eke out gains while consumer durables and IT drift lower.
HCL Tech tells CNBC-TV18 that higher furloughs at few clients can temper growth even as order inflows remain strong. Mastech adds that repurposing of spends with a cost focus is also delaying order inflows.
Poonawalla FinCorp informs exchanges that its board will consider sale of its controlling stake in its housing finance arm, a likelihood reported by CNBC-TV18 in November. JP Associates and Dalmia Bharat too inform exchanges that they may have likely transactions.
Nandan Nilekani tells CNBC-TV18 the funding winter will cleanse the startup system and make it more robust. He also sees IT services playing a big role in business growth despite the macro headwinds, but has failed to find a reason for cryptos to exist.
Rupee falls close to one-month lows as dollar index rises on the back of higher than expected US purchasers price index. However, lower crude prices support rupee from falling much. Good afternoon. You're watching us here on Halftime Report. I'm Mangla Malu. With me, Sonal Bhutra. We're looking good for the markets this afternoon. In fact, this morning we saw a bit of a dip, and that dip was swiftly bought into, currently sitting with gains on the index, just minor losses, so to say, but that is still a good 150 points recoveries from the lows of today's trading session. The mid-caps doing much better. Hi, Sonal.
Hey Manglam, good afternoon. And while we are talking about recovery, it's largely a stock-specific market today. We have a lot of stocks which are in focus, be it from the IT space, be it from the pharma space. So individual pockets, they are reacting to news updates that we got over the weekend as well. And we'll keep talking about that through the course of the day. We have a new listing as well, so we'll be talking about that as well. But the first stock that I'm going to be talking about is Glenmark Pharma. It is losing in trade today. Now remember, company had received a warning letter from the US FDA back in the day, and they had informed the exchanges about their letter for their Goa facility in November, and now we have accessed that particular form from the US FDA, and they talk about how it summarizes the violations of current good manufacturing practice as well. So in terms of the observations that are available for us, the US FDA says that company has not been able to thoroughly investigate any unexplained discrepancies that were seen earlier. So US FDA did come with some discrepancies, and the company was not able to answer them as to why this particular discrepancy actually existed. There were no adequate procedures for production and process control as well. They also failed to establish, according to the US FDA, any sort of lab control mechanisms as well, which were required for production. So that is something that the US FDA pointed out as well. And they failed to prepare batch production and control records with complete information. So good manufacturing practices, certain pointers that they mentioned did not exist, or the company failed to comply with that. And that's the reason why the stock is also declining in trade today, around 3%. And as Ekta has been highlighting, this year has not been great as far as US FDA inspection for pharma companies are concerned. So stock has taken a beating in trade today, Mangla.
All right, Sonal, thanks a lot for that. In fact, after the 2 years of pandemic, there was expectation that the US FDA will go ahead and ramp up its inspections, etc., which it hadn't been able to conduct during the pandemic itself. So maybe that is also weighing in. A bunch of stocks which are buzzing around in the last few minutes. We have VA Tech Wabag. The order inflow of the company came in this morning. They had an order of almost around 260 odd crores. So that stock is up around 11.5 odd percent. Godfrey Phillips is the other one, which is up 6%, has been buzzing around for a couple of months as well. Godfrey Phillips, in fact, this year is up 84 odd percent. But let's talk about stocks which are not doing too well. And it's a muted debut for Uniparts India on the bourses. Stock slides after listing at a slight slight discount to the issue price. We do have with us Gurdeep Soni, who is the chairman and MD of Uniparts. Gurdeep, thank you for joining in. Welcome to the stock markets as well. Not particularly great listing, somber, but let's see over the long term how you do generate wealth for your shareholders, etc. Before we talk about the business, what was interesting is that while IPO holders may be sitting on a bit of a discount to their issue price right now, one of the promoter entities, Jaswinder Singh Bhogal, was allotted about 1 lakh shares in 2022 itself at around 52.5 odd rupees. And that itself would amount to, within 10 months, a jump of almost 10x in valuations as per the IPO. Just wanted to understand what went down there.
Actually, we have, well, to start with, thank you for having me on your show. But on that particular question, we actually, Mr. Bogle works for the company. He's been working for many years, and so have the key management that we have. And we have an ESOP plan, and in the ESOP plan that was set up several years ago, the shares were issued at 52 rupees 50 paisa to the key management people. So really, this was done many, many years ago, and that's what the reason is that he has that share at that particular price.
The price was decided many years ago, is what you're saying. Is that so?
Correct, correct.
But the allotment happened just 10 months ago, so which is why, you know, it was interesting to look at.
Well, the reason is that, like I said, this was under the ESOP plan, and some of the shareholders exercise the right to apply for the shares depending on the longevity of their tenure with the company. And Mr. Bogle and, in fact, some other shareholders even before him exercised their rights, and that's the reason they got it at that particular price.
Okay. All right, Mr. Soni, so that is about this particular allotment that was made. Let's talk business now, because earlier we could not ask you to give us forward-looking statements or ask specific numbers, but wanted to understand how Q3 has been so far for you. We are towards the end as well, especially North America, because you get around 47% of revenues coming in from America. How is the situation on ground, and what does this mean for growth in FY23 and FY24?
Great. So, you know, I have the audited numbers for the first quarter. We had a top line of 348 crores with an EBITDA of 76 crores and a PAT of 50.5 crores. And clearly moving forward, right up till now, we are looking at being maintained and should be maintained for the rest of the year as well, you know. And talking about the US, even though there is talk about high interest rates leading to any kind of recession, but the two industry segments that we are in, which is agricultural machinery and construction machinery, both are very robust. In fact, the largest corporation in the world for construction and the largest in the world for agriculture, both are our customers. And in the recent statements about 3 to 4 weeks ago, both have mentioned that 2023 is going to be one of their highest years. And in fact, they do not expect they in fact expect the peak to be till 2025, 2026, you know. So we at Uniparts are looking at some very robust growth in the near future and in the next 3 to 4 years as well.
All right, it will be interesting to see that, because, you know, the last few years you have compounded at around 16%. It will be interesting to see whether robust means outperforming that or maybe just meeting that itself. You know, one more thing, Mr. Soni, you said that US and Europe farmers have had max income in the last 5 years and they're looking to replace their equipment. So could you give us a sense of what the average age of fleet in the US and Europe is right now, and what is the average replacement cycle there?
So normally the average replacement cycle is 7 to 8 years, but what happened was that the two COVID years, the average replacement, as we call it, could not take place, and they actually industry is talking about almost a 1 year backlog on replacement. So that, plus, as you mentioned very correctly, that because of high prices of food commodities, the farmers in fact have some of the highest income in the last 5 years. In addition to that, you know, in fact, our customers are also talking about that the dealer inventories are practically non-existent, and for most machines they have a 3 to 6 month wait, you know. So all of these are really pointing towards a very robust growth for these two particular industrial segments.
So, Mr. Soni, in that case, the 16% CAGR that you've seen in last 2 years, will you be able to do better than that, since you're talking about order backlogs as well? And margins at 22%, is it maintainable, or will you do better than that as well, because you are talking about more orders and better demand coming in?
Absolutely, and really we expect the margins to be maintained at that level because everything that the company did to come to these margins is behind us, and margins are clearly sustainable, primarily because we compete with made in USA and made in Europe and made in Japan, whereas Uniparts is the only company that is in a low-cost country with a delivery model which is offering supplies to its major customers free of risk, you know. And so that allows us to have the margins that we are having at this point in time. We also expect growth to continue at a fairly good pace because of the China plus one thing, while the industry will grow at its 7 to 8% growth that has been talked about by Crystal, but the China plus one is really playing out very well for India and for Uniparts in particular, and we are getting a lot more business opportunities actually coming and executing orders because of the shift of business from China to India.
A quick one before we let you go, Mr. Soni. You have around 87% revenues coming in from exports, 13% from domestic. And if you could give us a sense of going forward, what will this revenue mix look like? And at the same time, what would the revenue mix between your 3PL and PMP segments look like as well?
Right. So as far as the domestic is concerned, last year was about 13%. And in the last 4 to 5 years, this has just fluctuated between 13 to 17%. Moving forward, we expect that range to be maintained. Clearly, the demand globally is far more greater than what it is in India, although I won't say that India is lagging any behind, So we expect that percentage to continue in terms of the mix of the product, Again, on the second question, on the 3-point linkage, which is associated with the agricultural machinery, we had a 55% top line from this particular segment and 37% from the segment of construction machinery.
Okay. All right, Mr. Soni, it was a pleasure speaking with you. Thank you so much for joining us and good luck for the future plans and welcome to stock markets as well. With that, we'll slip into a short break. We'll connect with Srinivas Reddy, who's the MD at MTAR Technologies. His company has signed an MOU with Indian National Space Promotion and Authorization Center. Stay tuned. Welcome back. Well, Technologies, it is the next corporate on our radar. This year it has been losing in trade, down around 30%, but the new update is that the company has signed a new memorandum of understanding with Indian National Space Promotion and Authorization Center to expand its foray from precision engineering to complete system integration. To understand what this means for the company and the outlook going forward on this space as well, we are now joined by Srinivas Reddy, who's the MD at the company. Mr. Reddy, good afternoon. Thanks a lot for joining us. Well, can you begin by telling us what kind of contribution will you see from this particular MOU that you have entered into? What is the size of this order and does it come in at better margins for the company?
Yeah, it's not about the size of the order. It's about design and development and manufacturing the launch vehicle itself, where 80% of the world market is for small satellite launch vehicles. This will be a fully integrated system. It will be a product of MTR itself with the help of InSpace and ISRO to develop this. Once we do the developmental flights, it's a 3-year program. Once we do the developmental flights, then we take commercial flights to launch satellites for various customers. It's a huge thing in terms of addressing the international markets in terms of launching satellites. And this will take the company to a completely different level once we achieve this. We've already started the design work over the last 6 months and we are progressing very well. So this will be the real game changer for MTAR moving forward.
A sense of what the different level means for you in terms of potential business opportunity. We're not asking for a revenue from this particular order, but the opportunities that they open up for you and the kind of revenues you can generate from that in the next 3 to 5 years?
But starting once we develop it in about 3 years' time, we are looking at anything between 300 to 500 crores of revenues being generated progressively for launching the satellites for various customers. So that's the main goal for the company. It's a project which we are taking it very seriously, and it's a long-term process to take this forward.
What would the execution period be like? The earlier conversations that we have had, it falls under the space and defense category, right? This particular MOU that you've signed in. So what is the execution timeline here and what does it take your space and defense order book up to?
No, the orders are subsequent to the developmental program. It takes 3 years to completely develop the launch vehicle. And once we do that, that's where we'll start doing a couple of developmental flights and then the commercial flights will begin. We are already into the liquid propulsion engines manufacturing over the last 35 years. So it will take, that's the reason why that's the most efficient way of taking this forward. So once we do that, then that's how we'll be able to gain market share in the international market, where India is hardly about 2% right now.
Are the margins on this business equivalent to your current business, or are they accretive?
They'll be much better than what we are doing today in the current.
What would they typically be in the range of?
Better than what we are doing today in terms of margins. I will not be able to quantify the exact numbers, but definitely far better than what we are doing today.
Okay, and finally, you've also developed import substitutes in a lot of products. There's bellows, ASP assemblies, ceramic assemblies, heaters. What is the potential from here going forward, since you are talking about entering newer categories to up the growth ante for your company?
So the new products, what we have developed, would generate revenues about between 150 to 180 crores in the next year itself. I've already got qualified for some of those products, and that's a major leap in the product portfolio that we are having right now. So that's the reason I said every year we work on the R&D on various products. So year-on-year basis, that's how it will contribute to the additional revenues that we can generate through these products.
Will it require any further investment from your side, these two new products, the import substitutes and the MOU that you have spoken about?
MOU we already have. It's only on the recruitment side. We have to recruit enough people to develop this launch vehicles. That's the main thing. We already have enough infrastructure with us, since we are already manufacturing the engines from a number of years. So that would bring down our capex substantially down, because we have in-house manufacturing facilities.
And
it's only a requirement of various engineers and the team that we're trying to build now for this project.
all right. And typically, what is your target of generating new revenue from new products every year?
It depends on the product. I will not be able to say that, but we are doing a lot of new products. But it depends. Obviously, we are selecting products which makes a lot of commercial sense as well. And this small satellite launch vehicle is something which we rolled out a rocket engine in 1989 in collaboration with ISRO, with the designs being done by ISRO. Similarly, we are now looking at the entire launch vehicle itself. So this is a major product that we're targeting in 3 years' time, that we'll be able to launch it with developmental flights. And that will give us substantial revenues post that.
Okay, all right. Mr. Reddy, it was a pleasure speaking with you. Thank you so much for joining us and taking us through the details of this new MOU that you've signed and the new products that you're launching as well. The stock is up around 0.5%, and they do have a guidance of around 55 to 60% growth in terms of revenue on a YY basis and 30% EBITDA margins as well. Time for a break now. We'll now connect with Pradeep Kumar Patel, who's the VP Morbi Ceramic Association, as we are going to be talking to them about reports that Gujarat Gas has cut price of industrial gas and a lot more on demand side as well. Stay tuned.
Landmark Cars Limited, a leading premium automotive retail business in India with dealerships for Mercedes-Benz, Honda, Jeep, Volkswagen and Renault, and a commercial vehicle dealership for Ashok Leyland, launches an initial public offering of equity shares of face value of ₹5 each in a price band of ₹481 to ₹506 per equity share. Bid offer opens on Tuesday, December 13th, 2022 and closes on Thursday, December 15th, 2022. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the book running lead managers and the stock exchanges.
फूल वाला, केटरिंग वाला, बैंड वाला, ये लो भाई।
बैंड बजेगी पापा, अगर गड़बड़ हुई तो गए पैसे।
अरे नहीं रे, बैंक संभाल लेगा।
कैसे?
मैंने पॉजिटिव पे सिस्टम पे रजिस्टर किया है। बैंक को चेक्स और बेनिफिशियरीज की जानकारी दे दी है। बैंक चेक करेगा, जांच करेगा। डिटेल्स मैच नहीं तो क्लियरेंस नहीं।
अच्छा, लाइए मुझे दीजिए। फोटो वाला, लाइट वाला, मंडप वाला।
आरबीआई कहता है
जानकार बनिए, सतर्क रहिए।
बिल्कुल सही कह रहे हैं।
Welcome back. The Nifty has recovered smartly from the lows of today's trading session, almost 160 odd points. And there are a bunch of things that have actually supported it. This morning we were saying, that the positioning was such that it favored to buy the dip as against, look at the markets declining. And the reason why we said that was because we did see the Nifty futures premium contract. And now with the Nifty moving higher, the futures premium has gone back to around that 114 points as well. And this compares with just around 89 to 90 odd points. The second thing is that the put call ratio, which was at 0.75, usually between 0.7 to 0.75 is where we see a bit of a bounce, and the put call ratio too has bounced back to around 0.95. So the question is, where do we go from here? Now that we've conquered that 18,500 mark on the Nifty, the 18,400 put writers are feeling comfortable. 51 lakh shares added in terms of puts at the 18,400 level. 18,500 put writers too, for a premium of almost 66 odd rupees, have added close to around 52 lakh shares in open interest. So what this tells you is that the base has now moved higher from 18,350 to around 18,400 to 18,450. On the way up, however, the 18,600 call writers are feeling slightly jittery. We've seen some open interest position being unwound out there, 4.5 lakh shares, but mind you, there still is 1.3 crore shares outstanding at the 18,600 call level. So levels upwards of 18,600 may face some bit of resistance. If the Nifty was to sustain above 18,650, these call writers will be taken to the cleaners, and that would mean the market would inch further higher as well. But for now, 18,450 to 18,600 looks like the range. The put call ratio, the point that I was making, has now bounced back to around 0.95. Levels upwards of 1.2 is where it overheats. So we do have some time until then
yes,
as well.
we do. At 18,505 is the level that Nifty is at, and we'll watch out for the levels that Mangalam just told us. But let's move on, and we'll be talking to the Morbi Association, because reports are suggesting that Gujarat Gas has taken a price cut in the industrial segment by 5 rupees per SCM. To discuss the likely impact, we are now joined by Pradeep Kumar Patel, who is the VP at Morbi Ceramic Association. Mr. Patel, good afternoon. Thanks a lot for joining us. First of all, I wanted to understand whether a price cut has been announced by Gujarat Gas, and if yes, what is the current price of industrial gas? Okay, looks like we've lost that connection, but for now, Gujarat Gas is up 0.3%, and Morbi itself is around 49% of total volumes for Gujarat Gas. So that's a larger chunk that we are talking about, and any impact on pricing definitely does impact the volumes for Gujarat Gas, and also raw material prices for Morbi being a big clientele for Gujarat Gas. The stock has been an underperformer so far this year because of a number of reasons. We are talking about higher spot LNG prices, and Gujarat Gas in itself has a higher proportion of gas sourcing coming in for spot LNG prices, which were at a record high in the quarters gone by. And now, since we are seeing some slide coming in, there is an expectation that yes, the company would go ahead and it would cut prices across its segments, but that is something that we still need to confirm. But the second thing that's happening as far as the Morbi region and supply of gas is concerned is that now Morbi Association has started using either LPG or propane versus natural gas, because propane is much cheaper, LPG is much cheaper than the price at which natural gas is coming, and that's why there has been a massive shift in volumes from Gujarat Gas's natural gas to propane, hurting volumes for Gujarat Gas as well. So that's been a big pain point for the company as well. We'll try connecting that connection again, but for now, markets back in the green, 9 points higher on the Nifty.
9 points higher on the Nifty, and on the point of the Morbi Association itself, it'll be also interesting to see what they are seeing in terms of demand, because over the last few months or so, we've seen exports from the Morbi Association pick up quite a bit, and that's on account of China +1 and a couple of duties that were imposed on China from Europe, etc. And all of these things would perhaps mean that if exports from Morbi pick up, that would mean a positive for branded players in India, which would have more domestic focus, the kinds of Kajaria Ceramics as well as Somani. So we will, try to patch that connection with the Morbi Ceramics. Okay, Pradeep is with us. Pradeep, if you can hear us, the first thing is that has there been a price cut which has been announced by Gujarat Gas? Can you give us a sense?
Yes, that price cut definitely will be benefited to some industries, but as of now, almost 60% industries is using propane gas. Okay, so we required for more cuts to compete with the propane industries. There are two parts in the industries is there. Some industries is using propane, and some industries is using natural gas from Gujarat Gas. Okay. So definitely it will help some industries to cut the price for their cost.
So yes, there has been a definite 5 rupees per SCM price cut. I just wanted to confirm that first.
Yes, there is a 5 rupees price cut from Gujarat Gas.
Okay.
Yes.
So what is the difference if we talk about economics versus propane and Gujarat Gas's natural gas pricing? How much cheaper is propane or LPG right now? And you said 60% firms are using propane right now.
Yes, as of now, there is a difference between natural gas from Gujarat Gas and propane is almost 15 to 20%. So, so most of industries, 60% is industries is still using propane, and we want more price cut from Gujarat Gas to compete with the propane.
Could you give us in absolute numbers how much does per unit of propane calorific value cost, and how much of it is worth the same in Gujarat Gas or the gas that comes from Gujarat Gas?
As of now, propane is priced at 60,000 rupees per metric ton. But calorie difference is there, and Gujarat Gas price is about, with including VAT, we get the price of 65, 66 rupees. But with the calorie difference, in propane we get 11,000 kilocalorie per kg. So, and in natural gas we get the 8,350 kilocalorie per kg, per cubic meter. So, by the difference of calorie, the propane is cheaper 15 to 20% than the Gujarat gas, natural gas.
Okay, 15 to 20%. And when you talk about Gujarat Gas needs to cut prices further, you mean to say 15 to 20% more cut is required by Gujarat Gas in order to be at parity with propane. How much of a loss has Gujarat Gas seen in terms of volume so far? The last number that I had was 2.5 to 3 MMSCMD from Morbi. Do you expect more firms to switch to propane or LPG for that matter?
As of now, every industry is struggling with this difference price in propane and natural gas. So, remaining industry is also thinking to switch on to the propane. So, we have in talk with the Gujarat Gas to match the price with propane. So, Gujarat Gas volume also come back to them, and we are more comfortable to use natural gas compared to propane.
Okay, so if there is a 15 to 20% cut, you will shift back to natural gas as against propane that you're currently using. Take that point. Let's talk about the demand then, you know, because, you know, a lot of the Morbi players had begun to export. What is the export content of Morbi players currently right now?
Almost out of total production, our export is 30 to 35%. And as of now, there is a situation that export situation is good as international shipping freight has come down. So then we expect to have good volume for export in the coming future.
So this 30 to 35% goes up to what level going forward?
Yes.
Now, how much does it increase to? Can it be 40%, 45%, 50%?
40 to 45% we can expect.
This is in the next year itself?
Yes, yes.
Okay. Take that point, Mr. Patel. Thank you so much for joining in and giving us all those details. The fact that Morbi will export more than what it is currently would, you know, benefit players like Kajaria and Somani. But importantly, they've confirmed that Gujarat Gas has taken a price cut of rupees 5 per SC. What is the volume again?
MMSCMD.
MMSCMD. And at the same time, there is around 15 to 20% more required for them to actually make the switch back from propane, to which 60% of the industry had switched because of the rise in gas prices. Take a short break, come back, get you more on the markets and individual stocks. Let's talk about Colgate. That stock is on our radar, and the reason I say it's on my radar is because on Friday post markets, the company announced that tomorrow, which is the 13th of December, it will be holding its analyst meet. And why is this analyst meet important? Because it is the first time that it is an analyst meet which will be held under the new leader, Prabha Narasimhan. Prabha Narasimhan, of course, joined from HUL and took the post on September 1st itself. So she will perhaps lay out the policy and the strategy for the company going ahead. And usually these events do cause a bit of an excitement in the stock market. This analyst meet tomorrow is during market hours at 10:30 a.m. itself. You know, Prabha Narasimhan had joined us here on CNBC-TV18 at one of the events and said that the key goal for the company is to drive performance to also keep up with the changes in the environment. So to that extent, the street has a wish list as well. What is that wish list? The first one, of course, to drive performance. And Jefferies is believing that the company should speak about their market share, which has fallen from 55% to sub 50% right now. The second one, what they plan to do with their non-oral care business as well, is something that we'll have to watch out for, and which everyone is eyeing as well. And finally, any sort of roadmap with regards to other aspects of the company, with regards to M&A, etc., is something that we'll be watching out for too.
Okay, Colgate, important analyst meet tomorrow. We'll keep tracking that for you, of course. But let's move on and talk about Dalmia Bharat and JP Group. Is there a deal brewing between these two? Nigel is joining us with all those details. Nigel, what are you picking up?
Well, is there a deal brewing or is there a coincidence? That's something that the street is asking, because there are 3 board meetings that are lined up. 2 of them from the JP Group and 1 of them from Dalmia Bharat. So in terms of JP Associates, they have said they're going to be looking at the recommendations of the audit committee at that board meet. They're also looking at the progress on various divestment initiatives. For JP Power, they are looking at, they have a 2 million ton grinding unit at Nigri unit. That's in Madhya Pradesh. So they're going to be looking at the divestment of that. And for Dalmia Bharat, they are saying that they're going to be taking note of an event by Dalmia Cement. So let's see whether or not there is something going to come out of this that is linked to all 3. For the time being, the street believes there could be something brewing out here. Just to give you an alert, JP Group, the consolidated cement capacity is around 10.5 million tons, and it's backed by some part of captive power as well. Let's take a couple of scenarios. Scenario 1, what if Dalmia Bharat goes ahead and in fact, picks up the JP Power's grinding unit? That's a 2 million ton Nigri unit that I was just talking about in Madhya Pradesh. Well, that will be a mild positive, because clinker sourcing will be interesting over there. It's only a grinding unit. Clinker sourcing will be something that we'll track. But scenario 2, suppose you're assuming that the Nigri deal, well, it's a precursor for Dalmia Group to go ahead and acquire the remainder of JP Associates or a larger quantum of their assets. Then that would be viewed positively. Why is that? Because it gives them a foothold into the lucrative central market, which is growing at a fast clip. That's point number 1. And it also gives them access to integrated cement units. That will be viewed positively. So let's see what it comes about. But for the timing, the street believes there is something on the cards. And remember, Dalmia Cement, they have been talking about increasing their capacity to double from around 37 million tons odd. So any kind of inorganic growth will perfectly fit in. Back to you.
All right, Nigel, thanks a lot for that. So that's the big question, whether is there a deal brewing or is there just coincidence? But let's slip into a short break. 2 days from now, India's leading financial news platform sets the stage live for the biggest conversations of the mutual fund industry. Money Control Mutual Fund Summit is in Mumbai on the 14th of December, 4 p.m. onwards. Register now at the moneycontrolmfsummit.com.
Welcome back. Recently, we spoke with Nandan Nilekani, the non-executive chairman of Infosys, on the startup scene in the country and how the massive layoffs will affect the industry. Listen into what he had to say on this.
Well, I think in some sense, this is going to cleanse the system, because, if somebody doesn't have a very viable business model and has essentially depended upon a lot of capital to build, that's no longer valid. But I think it will force companies to become much sharper focused, much more frugal in their approach, more focused on solving real business issues. And I think at the end of this, we'll have a very good set of robust, healthy companies. So I think this will lead to a good outcome.
All right, and remember, you can listen into the excerpts of this conversation all day on CNBC-TV18. With that, we'll take a short break. On the other side, as always, Manisha Gupta joins in with all things commodities. Today, metals are in focus with Chirag Sheth.
Welcome back, and joining us on the show now is Chirag Sheth. He's Principal Consultant, South Asia at Metal Focus. Chirag, hi, good to have you. As is always the case, just before every US Fed meeting, we do see a lot of choppiness come into asset classes, more so in case of gold, because one, it is the dollar index that starts moving and gold doesn't augur well to hike in interest rates. But the markets do believe that this perhaps is towards the end of the high rate hike cycle. What are you anticipating for the gold prices to do in this week now?
Yeah, good afternoon, Manisha. I think what's interesting for essentially financial market is that post the inflation numbers that came in, the entire financial market went through a recalibration of market expectations, with regards to how the Fed is likely to behave over the next couple of months. And that's why we saw across the board, equities rallied, bond rallied, yields cooled down, and we saw what happened to precious metals. Suddenly from $1,600 prices moved up to $1,800. So there has been sort of recalibration which is happening. Now, what is interesting to see is that, how is the Fed likely to react? While we do expect that the pace could slow down, we don't expect Fed to pivot so soon, because what market is essentially trying to price in is that there could be one more rate hike maybe next year, and then there could be some sort of rate cuts. So I think it is essential over the next 15, 20 days how the Fed commentary comes out, what is the outlook, and as we get more clarity, we'll see price movement taking shape there.
Chirag, when you look at the gold price range in this year, it has been volatile at its best, nearly $450 of a range in the international markets, and the Indian markets have seen 8,000 rupees of a movement, and on both sides for that matter. What's your sense for the very near term, even if you take both the case scenarios on whether or not we are at the end of the rate cycle, or if we are, how are you looking at the prices moving?
So, Manisha, as you're aware, we've been saying that, market is likely to remain, volatile. We believe that between the highs and lows, essentially, we will see on an average $100 to $200 kind of range, going forward. I think that is likely to maintain because, at higher levels, market is trying to price in slow down. At the lower level, market tries to price in slower rate hikes. So I think there are multiple forces at play at this moment, and we believe over the next 6 months, this is likely to remain, market is likely to remain volatile.
Chirag, what is your best case and a worst case scenario for the gold prices in the next 6 months, let's say, if you have that much of a visibility?
Yes, so see, our base case scenario at this moment continues to maintain that gold prices could head towards, 1,700, 1,650 levels. That is our base case scenario. Okay. However, if there is, a data point which comes out which shows that the economy is slowing down much faster and the Fed is likely to cut interest rate, then obviously the entire market scenario changes to a bull scenario where, we could see 1,800, 1,900 kind of levels, going forward.
Chirag, another buying support comes in from the physical buying, one in the Asian markets, whether it's India and China, and the other is the central bank buying. We continue to see those strong numbers come in here. Are you expecting that trend to continue?
I think central bank buying, is likely to continue. Okay. With regards to physical buying, I think India has essentially slowed down quite a lot post the big buying happening in Diwali and Dussehra. So essentially, we have not seen any great buying happening for India, but some of the other markets, as soon as prices goes down, there is a bit of buying which is happening.
Chirag, very quickly, how do you look at the silver prices also, and what is your range coming in for the next 6 months on that?
Well, Manisha, silver has been a bit surprising. The kind of volatility that we've seen in silver has been a bit surprising. However, we believe that silver prices could have been moved towards, $18 to $17.5, over the next 6 to 9 months time.
All right. So not too bullish when it comes to gold and silver, both of those commodities. Near term could see some pressure depending, of course, on what the US Fed does going forward. So next couple of days are going to be important in that sense as well. Chirag, as always, thank you so much for joining us. And with that, that's all the time we have on the show. Business Lunch will take all the action ahead.